Every once in a while, something happens in crypto that makes you sit up straight, not because of hype, but because the math suddenly changes. And that's exactly what hit the Solana ecosystem this week. A key protocol didn't just upgrade, it detonated a 10x execution speed boost. Not 10%, not 2x, a full order of magnitude leap. As someone who's traded through ETH gas wars, Solana outages, and the noisy birth of Onchain Perps in 2021, this upgrade felt like deja vu mixed with a punch of adrenaline. It's the kind of update where you instantly know, wait, this could shift the playing field before the whales even adjust. And if you've spent any time watching how institutions react to speed advantages, you already understand why this moment matters. All right, let's slow this down and unpack what actually just happened. Because on the surface, it sounds like just another upgrade, but the details are way more dramatic than that. Drift Protocol v3 officially launched, and the feature list reads like the wish list traders have been shouting about since the early DeFi days of 2019. I mean, we're talking lightning-fast fills, ridiculously low slippage, and, wait for it, gasless trading. Yes, gasless. No transaction fees eating the edges of your trades. No more watching tiny scalps evaporate because you paid more in fees than you made in profit. If you trade perps, that alone should make your eyebrow jump. Now, pause for a second, because that's not normal. Most protocols tweak a feature here, optimize a contract there, release a fancy new UI. Drift didn't do that. They didn't slap a cosmetic patch over the old machine. They rebuilt the engine, the whole engine, from the inside out. And they didn't just rebuild it in isolation. They built v3 on top of Solana's newly stabilized performance environment, the same infrastructure that's been maturing ever since the Firedancer client came into the picture. Remember when Firedancer was announced and everyone said, if Solana can fix stability, game over? Well, Drift is showing us what game over actually looks like in practice. Think about how big that is. The last time the market saw a shift this dramatic was when Binance introduced cross-margin futures back in 2019. Overnight, the way people traded, from whales to bots to retail, changed completely. Liquidity moved, strategies evolved, new winners emerged. Entire ecosystems formed around that one leap in functionality. That wasn't hype, it was a structural upgrade. Now imagine that same level of transformation, but happening on-chain, transparently, with open liquidity and verifiable execution. That's the part people aren't talking about loudly yet. This isn't a centralized exchange dropping a new leverage mode. This is a permissionless protocol doing it, in real time, with the entire world able to audit the mechanics. And here's what makes it even more interesting. When things like this happen, markets don't react instantly. Whales take time to reposition, bots take time to rewrite logic, retail takes time to fully understand what just changed. But the opportunity, that tiny, quiet window before everyone recalculates, is happening right now. The ripple hasn't hit full speed yet, but the splash was loud. Let me show you a transition most people completely underestimate, because on paper it sounds simple, but in reality it's the kind of shift that quietly rewrites the entire market. When execution speed jumps by 10x, everything changes. Not some things, not a few metrics on a dashboard, everything. Think about it. When trades execute faster, the very behavior of the market starts to mutate. Bots, the invisible machines that dominate on-chain order flow, suddenly have to rewrite their strategies. A bot that was calibrated for slower fills can't survive when the battlefield speeds up. It's like trying to race Formula 1 with a car tuned for city traffic. Impossible. Then you have whales. Big players don't just buy or sell, they position liquidity like chess pieces. When execution becomes near instant, whales can move size more confidently, place tighter spreads, and engage in strategies that weren't viable when slippage was unpredictable. They get new tools, new timing, new angles. And retail, this is where it gets personal. For years, normal users accepted that getting a fill on DeFi felt like flipping a coin. Sometimes it worked, sometimes you were front-run into oblivion, sometimes a tiny market movement turned your order into confetti. But when speed jumps like this, retail starts getting fills that actually feel fair. That's not a small deal, that's psychological. It changes how people trust a system, how they trade on it, and how often they come back. Now here's the part people overlook. This is the same battleground TradFi firms, the big Wall Street houses, spend billions optimizing. Entire floors of engineers, quant teams, microwave towers between cities, exotic hardware, all fighting for milliseconds of advantage. Milliseconds. And for years, DeFi couldn't compete. Too slow, too clunky, too much lag between blocks or between Oracle updates or between manually triggered liquidations. But Solana has been pushing in a different direction from day one. It didn't promise decentralization as an excuse for slowness. It promised throughput, real throughput, fast enough to make traditional performance arguments disappear. And for a while, that promise felt like a dream that was always coming soon. Well, with Drift v3, that promise finally feels real. Drift didn't just speed up a protocol, it collapsed the distance between the performance of centralized exchanges and the transparency of on-chain trading. For the first time, you can feel those two worlds touching, CEX-level execution with blockchain-level openness. The traders who see the shift early always get the best positioning before the rest of the world catches on. Let me paint the picture for you, because the reaction wasn't subtle. It was immediate, loud, and honestly a bit surreal. Within just a few hours of Drift's upgrade going live, you could literally watch the chain waking up like someone flipped a breaker on an entire financial district. Total value locked didn't just rise, it jumped. Orderflow didn't just increase, it surged. And if you checked the on-chain heat maps, Solana wasn't glowing, it was lighting up like December in Times Square. Every block looked like a burst of activity, every dashboard like a festival of numbers. And here's the thing, this wasn't hype. It wasn't influencers screaming on Twitter or traders chasing clickbait. This was real capital actually moving, real users, real liquidity, real orders flooding into the system. I've been around long enough to know the difference between noise and signal, and this was pure signal. It honestly took me back to early 2020, right before DeFi summer, when the entire crypto world changed in a single month. Remember when TVL first crossed $1 billion? Suddenly, everyone's group chats, Telegram channels, and Discord servers were buzzing. Wait, something real is happening. You could feel that collective shift in energy, like people were waking up to a new reality they didn't see coming. But here's where this moment becomes even bigger than that early DeFi breakout. This time, the fire isn't starting in simple lending pools or yield farms. This time, the ignition point is derivatives. And that's not a small detail. Derivatives are the deepest, fastest, most competitive layer of any financial system, traditional or crypto. They're where serious traders operate, where liquidity concentrates, and where markets signal maturity. When derivatives heat up, the entire ecosystem tends to follow. It's like watching the engine room of a ship roar to life. Once that part kicks in, the whole vessel moves differently. So what does it mean when a decentralized derivatives platform suddenly unlocks CEX-level speed? It means whales start testing size, bots start recalibrating, retail begins leaning in, and capital, ever sensitive, ever opportunistic, starts flowing toward wherever efficiency and performance live. When you combine that with Solana's already high throughput, the picture becomes clear. We're not just witnessing a protocol upgrade, we're watching the start of a structural shift, one that could pull liquidity, attention, and volume deeper into on-chain trading than ever before. Moments like these don't stay quiet for long. And now this is where things start to get really interesting. You see, the culture around Solana is quietly shifting, and if you're paying attention, it's impossible to ignore. The whales, the big players, the ones who weathered storms like the FTX collapse and still kept coming back, are already whispering about what they're calling the next era of on-chain perps. Stop for a second. Did that phrase just catch your attention? It should, because here's the thing. Narratives like this never start with fireworks. They start quietly, almost invisibly in the corners of the market where only the insiders hang out. And by the time everyone else notices, the momentum has already built itself into a wave that's hard to ride but impossible to ignore. Across Telegram groups from Lagos to Sao Paulo, from Mumbai to Manila, the same sentiment is buzzing. Traders aren't just saying, oh, Solana perps exist. They're saying, bro, Solana perps finally feel usable. That little word, usable, is huge. It tells you that what was once too slow, too clunky, or too risky is now reaching a point where people actually want to engage with it. And when sentiment and performance align like that, well, history tells us that markets don't stay quiet for long. Think of it like this. Imagine a new cafe opens in your city. For months, only a few regulars know about it, but the coffee is amazing. Slowly, word spreads. By the time you finally hear about it, there's already a line out the door. That's exactly what's happening with Solana Perps right now. The early adopters are the regulars in the Telegram cafes, and the rest of the market is about to notice the quality. But it's not just hype. The technical improvements, the speed, the reduced friction, it all adds up. Traders aren't just excited for the narrative, they're excited because they can actually use this market in ways that were impossible before. And in crypto, usability plus narrative equals attention, liquidity, and ultimately opportunity. When the whales talk and the sentiment finally lines up with performance, that's when the market starts moving. And history shows it moves fast.
Hold on a second before you rush headfirst into FOMO. I know, everything about Drift V3 screams speed, efficiency, and next-level trading. But here's the reality check. Faster execution doesn't automatically mean safer execution. In fact, it can sometimes make things riskier. Sounds counterintuitive, right? Let me break it down. Think about speed like adding nitro to a car. Sure, it gets you from 0 to 60 faster than anyone else, but if the brakes aren't solid, or if the road is slippery, guess what happens? That's exactly what's happening in crypto trading. Faster execution amplifies all the risk vectors you might already know. Oracle manipulation, liquidation races, margin mispricing. These aren't just theoretical dangers. They've happened before and in spectacular fashion. Remember mango markets in 2022? A single Oracle misstep triggered cascading liquidations that wiped out millions in seconds. Or the wormhole bridge collapse, an exploit that felt almost like it came out of a hacker's playbook. Even centralized exchanges aren't immune. Flash crashes often happen because their systems are over-optimized for speed without enough safeguards. These examples aren't just stories, they're warnings etched into the memory of every trader who thought speed alone was enough. So yes, Drift V3 is undeniably powerful, the kind of platform that makes you sit up and take notice. But here's the key. Powerful systems attract powerful attackers. And in crypto, where the stakes are high and the incentives are aligned for exploitation, that's something you can't ignore. Opportunity is massive, no doubt, but caution isn't optional, it's mandatory. Let me put it in a way that hits home. Imagine you've got a high-performance sports car. You're on an empty track, everything is perfect, and you're tearing through turns. Exciting, right? Now imagine the track has a few hidden potholes. That thrill, it comes with real consequences. In trading terms, those potholes are the vulnerabilities we just talked about. And just like a professional driver respects the car and the track, a professional trader respects the platform and the risks. So here's the takeaway. Don't let hype cloud judgment. Drift V3 opens doors that were previously locked. The speed, the efficiency, the potential, it's all there. But understanding the risks, watching the vectors, and preparing for the unexpected, that's how you turn opportunity into consistent results instead of a cautionary tale. Speed is exhilarating, but in crypto, respect for risk isn't just smart, it's survival.
And yet, despite all the warnings and caution, traders are already making their move. You can feel it if you know where to look. On-chain flows are lighting up with fresh capital rotating into Solana. And we're not talking about the usual meme coin tourists scrolling through Twitter and chasing hype. No, this is serious money. The kind of money that actually changes markets. Here's how you can tell. People are bridging USDC, repositioning SOL collateral, testing pairs that used to feel too thin or risky to touch. It's subtle, but it's unmistakable. When traders smell an edge, they don't shout about it online, they act. Because in crypto, action talks louder than any tweet or post, and right now, the money is moving. Think of it like a crowded airport. You don't notice the travelers tweeting about their flights, you notice the planes actually taking off, one after another. That's what's happening with Solana right now. The capital isn't idle, it's flowing from one place to another, quietly testing, quietly probing, quietly building momentum. And here's the kicker. This isn't just random shuffling, the flows tell a story. Traders are looking at the infrastructure, at the improvements, at the speed and usability, and they're deciding it's worth stepping in. That's why even modest movements can feel huge, because this isn't a flash-in-the-pan meme trend. This is strategic positioning. It's smart money taking calculated risks, and it's exactly how big shifts start before the rest of the market catches on. Ask yourself, how often do you see capital moving before anyone really notices? That's the edge. That's the part of the market most people miss because they're waiting for the headlines instead of watching the flows. Solana is showing those subtle signals right now, the ones only the experienced traders truly read. So yes, there's risk, yes, there's caution, but there's also undeniable momentum. And if you're paying attention to the real indicators, on-chain flows, liquidity movement, collateral adjustments, you can see it before it becomes obvious. That's the invisible narrative forming under the surface, the one that whispers, this is where opportunity is gathering.
And in this game, doing is what matters most.
Before you brush this off as just another crypto hype story, take a moment to look at the trajectory. Solana isn't some fledgling experiment anymore. It's already showing real muscle. Think about it. During certain times of the day, Solana leads in daily active wallets. That's not a small achievement. That's people using it, moving funds, interacting with apps day in and day out. And let's not forget meme coins. Solana dominates that space. For a lot of traders and retail users, that's what initially draws them in, but the platform is proving it can handle more than just hype tokens. The tech is real, the throughput is real, and when we talk about TPS, transactions per second, Solana is already leaving many competitors in the dust. It's fast, reliable, and scalable, which matters when markets start moving at lightning speed. Now, here's where things get really interesting. Imagine if Solana suddenly gains a serious foothold in derivatives trading. Think about it. Derivatives aren't just small-time stuff. They're the heartbeat of professional trading. They're where the real liquidity flows, where big money moves, where markets get efficient. If Solana can now compete there, it's no longer a peripheral experiment. It's going head-to-head with Ethereum's liquidity engine. That's not a small footnote. That's a seismic shift. Let me put it in a relatable way. It's like a rising streetwear brand that already dominates local markets suddenly launching a flagship store in New York. You're not just noticing it anymore. You're seeing it compete with established giants on their own turf. That's exactly what Solana is doing, proving that it's not just fast and flashy, it can also be a serious marketplace. And here's the kicker. When you combine all of these factors, wallet adoption, meme coin dominance, speed, and now potential derivatives growth, you start seeing a pattern. This isn't speculation. This is a platform building a foundation for real, sustainable market activity. It's the evolution from Solana the experiment to Solana the marketplace, one where serious traders, not just early adopters, start paying attention. So, next time someone tells you Solana is just a fast chain for memes, remember the trajectory. The users are there, the tech is proven, the liquidity is moving, and if derivatives catch on here, Ethereum and the broader market has a new contender to watch. Which brings us to the closing truth. If this speed shift continues, if whales take another week or two to reposition, then everyday traders have a window, a rare one, the kind that doesn't come often. Solana's speed boost isn't just a performance upgrade, it's a structural invitation, and if you wait for everyone to see it, the opportunity won't just shrink, it'll disappear. Check the card above to watch more interesting videos. This is Blockchain Money.